GETCRACK. Wake up, motherfucker.
Airlines filed for bankruptcy with a plan to hand over control to bondholders after failing to agree on a merger with rivals. For more on this, we're joined by Bloomberg's Jonathan Randles, who's covering this bankruptcy for us. And if you look at the Bloomberg BCY Go page, you can see that Spirit Airlines is now the largest bankruptcy by assets in the last year. What do we know about the details of the process?
Yeah, they announced a pretty large restructuring of their balance sheet. That's their plan. They're in a deal with their bondholders who've agreed to raise like $300 million in equity, raise another 300 or so in bankruptcy financing, and also to take over the company through a debt for equity swap. So they're swapping out the bondholders $750 million in debt for the equity in the reorganized business, which on top of the equity raise is what the company says will be enough to get them out of bankruptcy in the first quarter of 2025.
Was this the best option for the company? At the end of the day, you think about their path to get here and the failed mergers, including the most recent failure to merge with Frontier. How did we get to this point?
Yeah, so they did mention in court papers that were just filed earlier today that those talks with Frontier have ended. They didn't explain or go into detail into why. We might get more information as the bankruptcy progresses. But the good news for Spirit is the many of their key creditors are already supporting this plan. They already have pretty wide support for it, so that their path out of bankruptcy, if all goes according to plan, should be pretty easy.
Alphabet are up 1.5% today, despite reports that the Justice Department plans to force a sale of Google's Chrome browser as part of its efforts to limit the company's monopoly in search. But could that end up hindering Google in the AI race also? Deirdre Bosa has more on the fallout in today's I'm a little fired up about this one, Deirdre, because I really like Chrome and I don't want them to mess with my experience. So anyway, over to you.
Well, the good news for you then, Kelly, is that this is likely a long ways away, and it does raise some questions. How would you even split it off? And would Chrome be worth anything without the Google ecosystem? So for some investors, a sale of Chrome, though not for you, Kelly, for them, it might be a better than feared scenario. And like I said, a long way off. There's variables as well, like appeals and a new administration to factor in. But it would undoubtedly have implications for Google's position in the Gen AI arms race, especially as we see that race move into its next phase, where agents or applications, they're going to be taking center stage. Here's where Google is uniquely positioned, in part thanks to its Chrome browser. It's really an ecosystem of data, synergy across its many products. You're looking at some of them here, and ecosystem lock-in. So when you log into Chrome using your Google account, it automatically syncs your browsing history, your calendar events, your YouTube recommendations, even your Google Maps locations across all of your devices. So an AI agent, it would draw on that full suite to build a highly personalized and unified experience. The more to draw on, the better the agent. Breakout Chrome, though, break that synergy. Potentially, you give an edge to other platforms, not little ones either, like Microsoft or Apple's, that have their own large ecosystems. And that's also where this potential remedy misses its mark. Instead of leveling the playing field for those smaller search rivals, it hands big tech even greater lock-in when they're all trying to create these agents. And you really give a leg up to the companies that already have a lot of data. To your point, Kelly, right. You have everything in Chrome. Maybe you would just move over to your Apple ecosystem.
I'm trying to figure out, who are they going to sell it to? I mean, private equity? Would they sell it to? It can't be a big enough tech company that it would defeat the whole. And what is the consumer harm? What is the consumer harm that selling Chrome fixes?
Well, if you think about Google dominance, right? Chrome is key to that dominance. Like we showed you that image of all the different applications that can sit within Chrome that it draws on. So therefore, you would take away that advantage to essentially have that search monopoly, because you have all of these things in, and Google can offer a better proposition to advertisers that they have all of this data around you. Right. As to who would buy this, Kelly, I don't know. It's a good question, because it really isn't worth the same thing without that ecosystem. So it's a good question, but it could certainly hurt that data collection for Google.
All right.
Entertain Bitcoin, you have to have one thing in your brain. You have to kind of acknowledge that governments across the world are going to continue to print money and debase their own currencies to solve problems because it's politically expedient. If you don't think that, you'll never come around on Bitcoin, ever. So that's what I found. Bitcoin is, some people are like, it has no purpose, no sense.
Right.
But that's why people are using it. That's how BlackRock is marketing it. They even show a chart of the purchasing power of the dollar since the Fed came out. Some people are like, it has no purpose, no sense.
Right.
But that's why people are using it. That's how BlackRock is marketing it. They even show a chart of the purchasing power of the dollar since the Fed came out. You used to see those charts like in the deep corners of crypto Twitter. Now BlackRock is out there traveling the world showing people this chart. So that to me is what people are using it for, especially in the emerging markets. That's where actually holding it directly, I think, even has more of an appeal. In the US, a little less so. But I think people do like to have that feeling that their real return might not be as bad if you have a little Bitcoin.
If Bitcoin breaks, does it noodle for years and gradually go down, or do you worry about suddenly?
Yeah, so certainly. I mean, I just think that if the other coins, to me, have a little more of that potential. I think Bitcoin is different. I think it is like a digital gold.
Why is Bitcoin different from the Doge?
Yeah, because in my opinion, Bitcoin is truly decentralized. It really is. It's based off of Cold War military technology. And so there's decentralized computers, there's no CEO. And in a time where governments can control the monetary supply with such force, I think there'll always be some demand for that. The other thing is it has survived like 4 or 5 certain deaths. It's like a cockroach.
Well,
it keeps coming back.
Is it surviving because of the constraint of countable supply versus gold in the Gilded Age? They found the Yukon to save gold?
I think both can survive. I think you're going to find gold always will have a use. People want to wear jewelry. Gold has that.
Lisa, take a note of it.
Bitcoin, though, I think not only is its resiliency, that's what first made me respect it, at least. I didn't understand. I'm like, man, it keeps coming back from like near certain death. And then it comes back, it makes new all-time highs. That's one. And I think the energy and the enthusiasm of its believers is, I'm not sure you can really eliminate that and extinguish it. There is a religious aspect to it, and it's a fervor. And so I wouldn't totally say it would go to zero. But I do feel like there could be a face-ripping sell-off between now and the next couple of years that these ETF people are going to have to deal. But I think they'll deal with it better than people think.
News that's just breaking. Kate Rooney has that for us. Hi, Kate.
Hey, Mike. So we've got a couple of crypto headlines here. I'm going to start first with a report here from the Financial Times that Donald Trump's social media company is in advanced talks to buy Bakkt. That is a crypto trading venue owned by the Intercontinental Exchange. That's the New York Stock Exchange parent company. As Truth Social does look to expand beyond online conversations. Again, this is according to the FT. The media group here is owned by President-elect Donald Trump, and according to this report, is closing in on an all-share purchase of that crypto exchange. They're citing 2 people familiar with those talks. We've reached out to both companies, but you can see shares of Trump Media up more than 8%, and then Bakkt was up as much as 40%, but is now halted for volatility. And then separately, Wall Street Journal now reporting that President-elect Trump is meeting with the CEO of crypto exchange Coinbase. That is Brian Armstrong. The Journal here citing people familiar with the matter. They are expected, according to this report, to discuss personal appointments to his second administration. Trump has been an avid backer of crypto. He's showed up at some of these crypto conferences and is, according to this report, talking to Brian Armstrong about the SEC commissioner. In particular, Armstrong has backed publicly Hester Pierce as a potential SEC commissioner, Mike. But a couple headlines to bring you there. We don't see shares of Coinbase moving on that, but anyway, back to you.
Well, we do have Bitcoin itself up close to $92,000, up a couple percent, Kate. Maybe on some of that as well. So good to get that, and we'll, I'm sure, check in with you on that a bit later.
Hello. It is November 20th, 2024. NVIDIA will report earnings after the close. Everybody's waiting on that, man. Here, let me play the video of that thing first. Here, let's see. Where is it? Blah, blah, blah.
Let me start with you a little bit. Bank of America wrote up this big note about watching the options and what they indicate. What are you seeing with the options on NVIDIA?
That's right, Contessa. The financial markets Super Bowl is here, and options traders are positioning for a mammoth move in NVIDIA stock after it reports today. They're pricing in around a 12% move in the stock. That's tomorrow alone. And just putting that number into context, the average move over the past 8 earnings releases has been around 9% up or down, and a 12% move would be a move of around $400 billion for NVIDIA. So people are really bracing for fireworks after this report today.
You're looking at a company that now has about $3.5 trillion in market value. It's up almost 200% this year. Beth, when you're looking at the fundamentals of this company and where it could go, what gets your attention?
Oh, wow. So many things get my attention right now. I guess first and foremost, big tech CapEx continues to grow. We're tracking over 200 billion this year. We'll be over 300 billion next year. You cannot overstate the importance of this, because this is where all the demand is coming from. They continue to spend. Secondly, when you go and look at pricing power, Hopper was priced about 40% lower than what we're tracking for Blackwell right now. So when you look at the demand signals, you look at the pricing power, and then what you want to layer in is the supply chain signals. We're actually on the other side of that debate around whether there are supply chain issues or not. What I'm seeing from Taiwan Semiconductor right now is a surge in their high performance computing segment. As a fab that I've watched very closely, their numbers are indicating that 2025 is going to be a very big year for AI and for NVIDIA.
Are you concerned at all about the reported problems with overheating in the servers?
Not concerned at all. It is well understood that Blackwell is pushing the outer limits of what AI chips are capable of. So it is assumed that there will be need for new components, new processes. It's called CoWoS capacity at Taiwan Semi. Those things are assumed with the fact that they are pushing that upper limit of capabilities. In addition to pushing the upper limit of the capabilities of AI chips, they will also be pushing the upper limit of revenue next year. So when you look at it combined, this is the kind of thing, as an investor, I want to see.
Analysts are expecting about $33 billion in revenue, which would be 83% growth over last year. What we have seen in the past is that when NVIDIA moves, not only does it move the whole market, but specific companies in that sphere. Gunjan, which companies are you looking at? If you see those massive moves that the options are indicating, which other companies could move in tandem?
Definitely, Contessa. I mean, I think one thing that makes NVIDIA's earnings so important, and to your point, people do watch this and parse the leaders' comments as they might Fed Chair Jerome Powell's comments, because it's such an important indicator for the broader AI trade and the semiconductor sector overall. So I think people are going to be watching companies throughout that sector, even the Magnificent Seven, for clues after this earnings report.
But Beth, you point out that this is not even close to even the rest of the Mag 7, especially in terms of the profit margins for this company.
Oh, absolutely. It's not only the top line that separates NVIDIA, it's also that operating margin and the cash flow. It is double the majority of the Mag 7, double Apple, double Google, 17 points ahead of the second place winner, Microsoft. However, I do want to say that Q3 is somewhat irrelevant. All eyes should be on 2025. This is when Blackwell is arriving. It's really, really important for investors to understand that at this point, we're 7 quarters into the last generation of GPUs. The new generation is coming out, and that's what investors should be focused on.
Ooh, man, the hype is building. All right. So Everything is going towards Nvidia. If Nvidia craps out, oh boy, the whole stock market's gonna crash. So get ready, get your seatbelts on. Let's see what's going. Here's an article. I'll read this real quickly. This was disclosed 5 days ago. Okay, so keep this in mind when you're looking at Nvidia. Nvidia discloses stake in Applied Digital, keeps ARM SoundHound stakes. So Nvidia also buys shares in other companies that they're partners or future customers. So they have enough cash flow to be able to use that money to support their own ecosystem. So even if companies right now, like these smaller ones, you see this list, you got Nano X Imaging. This is an Israeli. I think they're trying to do some competitor to CT X-ray scans or something. I've played with this, traded this stock before. It's trash. Like you just trade it. So it's interesting that they started putting some shares into that. So if they're going to AI, then that's interesting too. Recursion Pharmaceuticals, I've talked about this several times. RXRX. I'm thinking about buying it right now. I don't know. That might be, I might be shooting myself in the foot before Nvidia earnings. Serve Robotics, I'll look into that chart with you guys. SoundHound AI, it had earnings last week, not good. There's another AI stock that had news with Microsoft yesterday, so I'll look into that one as well. Applied Digital, same thing. We'll look into the stocks. So these types of companies, also ARM, obviously ARM, very important. So Nvidia has enough money that they can freely spend it and buy other companies' shares. This is how powerful liquidity is. So when you got the money printer on with Jerome Powell, you have a lot of people putting in money from foreign companies, foreign countries, foreign investors, pension plans, all this stuff. It feeds the system. This is where your money velocity comes in. Everything kicks in. When money flows around the system, it just creates more money, and credit, right? Starts with credit. So the interest rates are very important with the loans. And then from there on, you go to private equity, VCs, like venture capitalists, all these people. So not only the banks, it just trickles everywhere. And you yourself with your 401k, if you get wage rises and earnings go up and all this stuff, in the company, they give you raises, you got inflation raising you, with minimum wage, I don't know, all that stuff. Yeah, it'll start pushing. There's an upward pressure too from the bottom, and it'll squeeze up to the top where they have to compete, right? Everybody has to compete now to get workers. So this is what's going to happen. And the only way to support this type of, so I'll tell you this: inflation isn't going to go away. It's over. Inflation is here to stay. You're going to have to suck it up, and the only way out of it now is to keep the bubble going. You got to keep the bubble going. If you can't keep the growth engine flowing, you're going to have a real bad time in the coming years. So we can discuss that maybe in 2 years or so, see how things are shaping out, and then we can go back there. But let's get to the charts here. Looking at Bitcoin, we'll have to look at Bitcoin. Bitcoin most favored play right now. Oh, SMCI is another one we have to talk about. So SMCI, if you followed me and you were buying down here, right around here, right, and if you bought a ton here at 18, you should have sold some on the last pops yesterday, Tuesday. Very nice pop here. And you see, if you look at the chart, you see how they line up very well. So if you look at the long term here, we'll look at the long term. You see these two lines from May 2023, July 2023, these two lines here, the purple, the upper purple, and the cyan one. And then I could draw smaller lines here and intermediate lines just based on opens and close, and all that. So near the open on this, it hit a low here, so I put a line there. And then here too, you hit a low there, I'll put a line there. So the thing about stocks is that most of the action happens on opens and closes, because the reason why is most of the time buying and selling is done during open and closes. And another reason, though, is because options don't get to be traded after hours or before market opens, right? So options start going into play, and I'm sure people put strikes in these areas. So that's why conveniently you see like when they drop here, and then when we have to go back up, you open near where a major bottom was visited. So when you ended up back here, you went a full 360 back down here, and then you just go like, or 180, my bad. And then you just drop below it. You have to go back up. This is why it's very important that you respect these lines. So these lines get respected. An interesting thing on Monday was that it hit that upper line right here, that line that was made in the opens during November 4th. And then when it tapped it, it just went crashing straight down, like within an hour before close. And it closed right here at that cyan line where we went way back when, all the way in 2023. So, these lines have a magnetism to them, and they get stronger and stronger, when you keep tapping them again and again. So right now we went over it, and then we went back, and now we're hitting this top purple line. So these two, the cyan and that upper purple line, are pretty important for now. And once we clear all this stuff, we should hit 35 again. If NVIDIA doesn't say anything bad about SMCI, or hopefully NVIDIA doesn't even crap out itself and say like, oh, AI growth for next year isn't as high as people expect. So this is why SMCI, I played it, because it's a good NVIDIA play. Because you could play NVIDIA shares or options, but SMCI gives you the most juice. You see, it's been beaten up so badly on all the news about its impending delisting. Well, that's over. The delisting fear is over. So this extra push down here is completed. Now, for it to recover back before everything got really bad, because there's many levels here where it really started to break down. Like, I think the first major breakdown was around 60 right here. Yeah. I forgot if they started getting a short attack here, but I think this was where it began to accelerate. They probably were already shorted way longer, because when you look at this distribution pattern, it's very Wyckoffy, Wyckoffian. So like I showed the chart many times where I said like, yeah, this is distribution, and it's going to have to crash through back down here, and it did that. So we got that, and that's why I said, well, and it's just before NVIDIA earnings, very perfect, right? It's all set up. So for that trade, everything is set up for that trade. It just makes sense. I mean, there's no guarantee it will do what I say it will do, but I'd rather buy down here than the idiots that bought up here, right, in 92. Like, why would you buy here? The way it's moving, the pattern here, you make this top, and then you can't even go above halfway through this down move here, then yeah, it's obviously it's gonna eventually break down. And here it was broken, and I'm guessing this is when people started saying, oh, there's financial malfeasance, accounting errors, fraud, more delisting fears, fear news. So the news will just drive it all down, but the news is already too late. Whoever was sold up here already figured out like there was something strange about this company, because this was just a bunch of idiots that overbought it, shot it way above what it's worth, because NVIDIA AI news brought it up here. And actually the very top was when JP Morgan or Morgan Stanley, one of them, said like, oh, it's a buy now. Like, why didn't you tell people to buy it down here? Like, they always tell you to buy it at the top or sell it at the bottom. It's like ridiculous. And the funny thing is, like, the suckers always fall for it again and again. You go look at CNBC. Yeah, they tell you to buy at the top and sell at the bottom over and over. And it works. It works. And this is why I can make money, because I'm not trying to beat the guys at the top. I can't be a Stanley Druckenmiller. I'm not a George Soros. But because there's so many idiots in the market that follow CNBC, the news, and all this, they're always behind the curve, that as long as you beat them, you can take the table scraps, because all the rich people are dining in the rich man's table. You can be the dog that comes in and just get the scraps. There's tons of scraps, and these scraps are nice, right? You get like nice moves here. at the extremes. You get the extremes moves from the top and bottom. So if you can figure where they're going, you can grab the money, because they can't take all the money. There has to be some money left over, because you, as the retail investor, retail trader, are the liquidity. You are the oil that moves the whole market. You know, they can't move money around unless the casino has flow. You know, it has to have a flow. It has to have money transfer. So the market is made because of participants. So that's why you have liquidities. When you look at real estate, right? You look at the real estate market. How many times does a house get bought and sold over its lifetime? Very few times, honestly, compared to a stock. A stock share could be traded billions of times within a month, you know, and this is why they need you to play. So they'll keep you in the game. And if you're in the casino, you know, you got to know the game. You got to be smart and pick the times where you decide I'll take a risk. You know, you got to be a risk taker. If you're too afraid all the time, well, it's better off you just stick with a CD or savings account. And that's equivalent to life too. When you're doing a business, you're taking a risk, a huge risk when you do a business. And when you compare it to like working a 9 to 5, a 9 to 5 is cushy, right? It's safe. And even better is like if you work at a government job where it's nearly impossible to fire your ass. So if you look at it that way, then that's kind of like a savings account, a CD, but you're not going to get much. You're not going to grow anywhere if you're working in government, right? Compared to, well, you know, sometimes they do. You can double dip on pensions and things like that. But aside from that, you know, in the stock world, the bond market world, crypto world, you're not really taking the risk, and you get the results you'll get from there. Okay, so we got that. We're gonna wait and see if I get up to 40 or whatever, but maybe it'll just crash back down, and that's the end of this trade. Nothing you can do about it, and we move on. So a lot of times you got to move on. Sometimes things don't work out. Okay, Zim, we had earnings, and we nearly got above 30, and then we just fell back. Yeah, well, that's how it goes. Sometimes that's how it goes. So Zim is an Israeli shipping company. We still have trouble in the Red Sea. People can't go through the Suez Canal safely. Also, China is trying to stimulate the economy. That's not really too successful right now. Hopefully, by next year, you get really good stimulus from there and the U.S. economy is good. Then shipping containers will be big business because they can charge whatever they want. And that's why your inflation will stay high, because shipping things around the world costs money. And it has a special dividend. I think it was like $3. They always give big dividends, like 20% like yield or something. It's crazy. Anyway, so it was up like 11-12% at open, but it just lost all of it. So I don't know what to do at this point, because I sold some before earnings and I sold some at the open. I'm not sure if I would buy back what I've sold so far right now until I see this try to attack 30. And shipping stocks are notoriously nasty to invest in. I would not recommend that industry. It's too hard because like you got to keep track of like the Baltic Sea index, where the shipping containers from the Baltic Sea and then the shipping containers, like freaking hell. Like this industry is way too hard for retail to understand. I try to stay away from it, but I like playing this stock because ever since COVID, you know, this stock has been beautiful. And this stock started during COVID. So like you see this was the great era of shipping. You know, when they charge you an arm and a leg just to get anything around the world during COVID. This was like poof, going from 11 to $90. This is a beautiful stock. And I think I'll talk a little bit about the different ways a chart can be set. So I didn't discuss this in the October streams because I didn't want to like talk about too many basic concepts here that might confuse you, but I think this is the time to talk about it. So there's two ways to set a scale on your chart. One is called logarithmic. Okay, I don't know if you remember that word from math class, but let me tell you this way. Let me set it to arithmetic setting. So this is linear arithmetic scale. There's a big difference. with a stock like this. You see? And why does it do that? Well, because arithmetic only scales it by the actual number. So the absolute value. So like you go from 10, 20, 30, 40, it will just scale the candles accordingly because you just go from 1, 2, 3, 4, 5. The spacing between 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 is the same. 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20 are the same. But if I do logarithmic, I'm actually trying to scale by percentage. Okay? So when I did this, you look at the first two candles, they look small, right? Compared to when I did logarithmic. Why? Because logarithmic now, when it shows you the percentage is actually larger now as you go up in number, right? That's it. So what you have to think about is that when I go from 10 to 20, that's 100% move up, right? 10 to 20. And then if I go like this to a bigger number, now I go from 100 to 110. It moves by 10, but 10 out of 100 is not the same as moving from 10 to 20, even though absolutely 10 to 20, right, is 10. Absolute value is just 10. But what's the percentage of moving from 10 to 20? 100% versus from 100 to 110. A lot different. So that's why logarithmic, I scale everything logarithmically because what I care about when I do my charting is percentage. So when you do your portfolio, I don't care if like let's say Apple moves like $1 up or $1 down. I don't care about that. What's the percentage? What's the percentage move? That's what I care about because that's how I grow my money, right? So you should look at it that way, and all your charts should be that way. Especially, when you look at Bitcoin, like Bitcoin's insane, right? So if I did arithmetic scale on this thing, like look at that. See, I want to look at percentage. Like, okay, 60,000 is a big number, but my bad. I'm not supposed to do this one. Okay. Here, like, yeah, 60,000 is a big number. But if I bought it like here at 11,000, so 60,000, that's a big difference from where I bought it if I bought it at like $1, right? So yeah, looking at something that moves up a lot like this, you should definitely just try to look at it percentage wise because that looks way different, right? So that keeps you in perspective. Otherwise, you'll get fooled and think like, oh man, 60,000 is a big number. 6,000 is meaningless if you bought later in the game, like from 5,000, 10,000 onward. See? So that's why when you look at it this way, you can see the actual growth, especially like also S&P 500. Yeah, the same thing. Like we can go all the way back to the 80s, right? And stuff like that. So I can go all the way back in the day to the 80s, like here. And if I just change it, the scaling, it'll look way different. See, it looks like it's amazing. It's like, wow, man, I'm rich, but well, not all of us bought in the 80s. Okay. We're not boomers here. So, so yes, try to look that up yourself, logarithmic scaling and this and that. But I think when you do your charting, be aware because I think the default is not logarithmic. They'll set it like this, arithmetic, linear. Okay. So, and I think there is a article that you can look up on Investopedia on this stuff. So, okay, I'll put the link for the article I just read here. I didn't actually read it. I just listed out the stocks. You can read it yourself, and you can see what Nvidia is buying. Investopedia. Let's see. Linear logarithmic. Let's see. Okay. Yeah, they probably do a better job than what I did to try to explain that for you. Let me see. Yeah, they have a couple articles on this. Yeah, I'll put a link for this one. So you can go to Investopedia and you can read that if you didn't understand what I just tried to explain. But I mean, visually, you'll see the difference, and it's up to the person, honestly. Sometimes people don't care about that, but I find it looks really confusing when you have so much price history and you've gone up so much. Yeah, you have to pick one or the other. You just can't, like, and it will affect your charting too. Like here, like if I drew lines around my chart, sometimes visually it'll give you a different look to it, because here you see it's more parallel, flat. But when I take away the logarithmic, it's kind of curving up, and that's a distortion. If you just look at percentage wise, it's a straight line. So people are just like, when they look at investments, they just look at how much percentage I'll gain over the year to next year and all that. They're not looking at like how many points I got up and down. That's fine when you're doing small scale stuff or things that don't move very much. But nowadays everything moves crazily. So yeah. Anyway, let's see. Blah blah blah. T-Spell says I use levels of liquidity with past price history along with higher time frame. Yep. Yeah, we discussed multi-time frame a little bit. We'll have to go over that stuff again. Yeah, strong price history. Yeah. Now, when you don't have price history, you're entering a new world. So that's a good segue because we can talk about this stock here, MSTR. Now, this is a Bitcoin stock. It is a Bitcoin stock because Michael Saylor is using this to buy more Bitcoin. And that's why when Bitcoin goes up, this stock goes up. And when this stock goes up, Bitcoin goes up. Because right now, it's just a perpetual motion machine or something like that. That's why I talked with John, like some on our early streams, talk about Michael Saylor, Bitcoin, and things. Actually, John shorted Michael Saylor's stock way back when, back in the .com era. That's when it crashed. So let's go look back here. So I think I drew it on this thing. Yeah, so the last time we've hit a high was in the 2000s in $325 about. So if I just do let's go 1 month. Yeah, so last time was March 2000. That was the last time this stock reached its high. And guess what? When it punched up above it last week, I was like, ooh, something interesting will happen. And yes, it did. Because once it retested it a couple times into options expiration last week, boom, boom, boom. And the funny thing is this thing has moved a lot better than Bitcoin itself since August. So if you look here, I think this is about, 200%. Yep. And I think at the same time, from August to November, Bitcoin only made about 100% or something like that. Barely 100%, probably 80% from that point. Yeah. Like, let's say you were really good and bought that wick at the bottom here and sold somewhere here. Yeah, see? It's about 80% during that same time period. Well, MSTR moved 200%. So, and now that we're above here, there's no more price history now. This thing is free to go as high as it wants. This is scot-free. We're doing new stuff here, and it's going to be totally tied to momentum, how people feel Bitcoin will move in the next coming days. So even during this 3 days where Bitcoin moved nowhere, this thing is already up, I think 40%, right? From this thing. Is this 40? Yeah, 40. See, this is why you gotta use logarithmic. If you did this, it looks like way like, whoa, this is a lot. No, you're wrong. This is not, because if I bought here, it's 40%. It looks too exaggerated. See, so that's why I say you gotta use logarithmic, because nowadays all kinds of stocks move so fast. This is not the old days when stocks move like your boomer parents, when you're like, oh, stocks only move like a few dollars a day, blah blah blah, only 1%. Nah, man. Nah, nowadays stocks will fly, go to the moon, no reason and rhyme to it. So catch it. Like this one, quantum computing. Like this is up like Look at this thing. This thing does whatever it wants. Like each day it goes up and down like 30%, 60%. Or this Chinese stock, which I have no idea what it does really. But after earnings, well, it's strange. I thought earnings was already out yesterday, but I guess it took a while for the Chinese to catch up to us and on the news, and it took another day, so their market pushed it up. So now it's up like 40% today. And I didn't play this one, but if you looked at the chart, the way it moved, and one way you could look at it too is like you look at the equivalent sector. Like let's say look at the other Chinese stocks. Okay. So this thing is following the other guys in the tech sector in China. But you look here after, like, not even after, it was on election day. So before that anybody knew what the results were going to be, or there's no polls were, polling stations were closed at that time. So there's no exit polls for it to pump like, I don't know why it pumped 20%, but that gave me a hint something was up. So I started watching this thing. I didn't play it though. I'm not gonna be gambling these nutso stocks, but you guys can, because if you look at this chart, you start seeing strange things happening to it. Like, why is this thing not following everything else? Because it's going really extreme, and then once the other Chinese stocks like fell back, like they said, well, whatever, Donald Trump's in, we can't do shit. This thing just kept staying and holding at the $4.20 area, which was very important way back when. Let me get rid of this here. I was like, okay, let me get rid of that for you. So this area is important. These two levels here set here, $4.20, $3.40 around. So once it held that area, I was like, oh shoot, most likely it's gonna go up again. But it's next to earnings, so you kind of have to be like, well, are people buying here because they know earnings is good, or is this just a trap? Well, earnings is good, wasn't a trap. So there you go. I mean, yeah, so when you look at things like this, keep in mind charts tell you things. They do have some kind of hint to them. But the other problem too is like playing this thing. It's very volatile, so it's not something people would be comfortable with holding. But trading, yeah. The problem is it's a Chinese stock, so it's going to be determined by how the Chinese market does when you're sleeping. So by the time you wake up, it could be told. That's why you have these gaps. So a lot of Chinese stocks will have these gaps. It's very annoying to read the chart like this. So you get these huge moves where you're just like gapping up and gapping down because it's influenced by Hong Kong and what they do, not what the U.S. market determines generally. So the U.S. either follows and pumps them, and then they follow us, or they reject what we say on our market. So that's why when we do 24-hour trading, we can eliminate a lot of these issues. So the casino can be open 24 hours a day. You won't have these things too much anymore. But yeah, when you're dealing with Chinese stocks, expect this type of stuff. So it can get pretty annoying to read a chart. Really, yeah, if you had the Chinese chart, maybe it can fill in the gaps here, and then you have a better idea of what it's doing. So you take the volume of the China. So, but that's a lot more homework. And TradingView doesn't have the Chinese data here, but yeah, you gotta probably have to do that if you're trading. Anyway, good thing to mention. So yeah, there's a lot of stocks out there that are highly speculative, and I put them on the banner that's scrolling down at the bottom. You can look at them yourself. Got RX. I just I took a stab and bought it here when it went down to $5. Maybe I just murdered myself doing that, because Nvidia earnings is coming out, and if it's not good, then that stock's going down with it. Bye. Let's see how Nvidia's doing. Yep. So SOX is at the bottom, I think. So everybody else is at the bottom. Yep, we're at the bottom. So SOXX and SMH, the ETFs for semiconductors are at the bottom. We're still stuck here waiting on NVIDIA. And if NVIDIA is successful, we can go back to the top of this range. And I think this will be the last move for semiconductors. And if it is truly the last move, I don't know how long it'll be, because if it actually gets above here for the SMH to 270, I think that's it. Maybe it can go a little bit higher and try to get its old top in July. Really depends on the last remaining semiconductor earnings, which will be Avago, so AVGO, Marvell, MRVL, and MU. So those are the last major earnings left after NVIDIA, and they'll be around December. So all of them will be December, I think. Yeah, December. So if NVIDIA is good, and then you have all those three good, then this can last till New Year's, and hopefully maybe a couple weeks after New Year's, so mid-January. And then you should watch out for what the NASDAQ does, because then the NASDAQ will have lost all its remaining fuel. That's it. We're right here on the NASDAQ. So QQQ is 499. It pushes up, then maybe it can get to 520 or something. And S&P can get to 600 will be like, yeah, that's basically 6,000 S&P 500. So somewhere around 600, that'll be the last exhaustive move. There'll be psychological. It'll try to go above it a little bit, and then it'll fall back. And that's the end. That'll be the last move into January. And from then on, you can't do nothing until March. So that's usually how it goes. So the first quarter will probably zigzag up and down, doing nothing again. So most of the moves are during certain times of the year. Okay. So that's why when you have to rotate out to another sector. So another sector, we have to look at home building. So I'm still watching this guy. So I want to get back in. So when I was in home building, this is ITB, the home construction index. I was hiding out here. So this was actually the top of the semiconductors, right? So the semiconductors were great the first half of the year, and they're all trash now in the second half of the year. So you had to move out to go somewhere else. Man, there's too much noise on this chart. Let me go somewhere else for you guys. Here, let's see. I don't have any lines on this chart, right? So I draw ITB, right? I do this, and then I'll compare it with what semiconductors were doing. Okay. So you see here, this was the top of semiconductors. So July, and this was the bottom, the local bottom of ITB. ITB, if you look at home construction, the support for this ETF was around here, right? You see that? So it bounced here a couple times. It hit here, pulled back, and then it pulled back. So this was a good time to buy, I thought. And then once you hit this, it started rotating. So I think this is where all the money, people were selling on the move, the last move up in semiconductors here. And then they were probably going into other areas, one of them being home construction. And probably the second half, once home construction started fading out, like here, so home construction started crapping out around September, I'm guessing they probably moved back to banks or something like that, right? Yeah, probably XLF or BKE is the ETF for banks. BK, I don't know. Bank ETF. Yeah, KBE. Okay. New price scale. All right, let's see. Yeah, see the banks were creeping up alongside it, but I think that they probably got out September. They probably started buying banks in October here before the last move up on Trump winning. So, yeah, I'm guessing that's how it went. You kind of have to anticipate how sectors move. This is the hardest part of investing. So if you're not a trader, you still have to think like a trader, though. If you're moving your portfolio around every quarter or monthly, if you're doing it more frequently, you just have to figure out, oh, okay, bank stocks will be hot this time of year. Then maybe this one will be hot this time of year. This one, and so you're fighting cyclical patterns, like secular patterns, all kinds of things that move. And that's why we have to talk more about cycles later on and bring that into the analysis, and you'll understand why I do that. And once you get that, you'll really see like sometimes things move together, sometimes they diverge, sometimes they'll do other things. Yeah. So most of the time, these things kind of move along with each other, like banks and home construction, because they're both tied to interest rates. But you can see, like at certain points, they don't. Right? Some move like strikingly bad because this was during the crash of Silicon Valley Bank, and then now it's starting to diverge here. So I think if you see more divergence, that might be interesting. That might be interesting. But we'll see. They tend to follow each other. And what's another one? There's plenty of ones that are tied to the interest rates. I keep forgetting though. Yeah, I probably should make a list somewhere. Okay, so that's enough for now. I think here before we get into Nvidia within like less than an hour before the close. So I want you to see this. This was a Wyckoff analysis done by the Wyckoff guys.
Well, it's kind of interesting how these bars occur in this whole structure. If we were to look at like all of the down bars that have that type of big movement down, since this moment right here, we look at this bar, that doesn't have it. But since this maybe even since this moment right here was this bar as well. Each bar like this, guys, what do you see happening on the immediate follow through? That's very interesting, Antal. Wouldn't that give us some kind of information on its own in terms of the bias that we have here? Every time we have this, there is like immediate buying that's coming in. So is that a useful information for us?
We are in a bull market. Even
Exactly.
even from the top, you don't have an immediate follow.
Okay, so this is what we got to improve our skills at, like looking at these kinds of patterns. And let me bring up the Bitcoin chart because you can kind of see a lot of this in this Bitcoin chart. So yeah, I drew a lot of lines here, a lot of lines. Let me get a cleaner one here. This one, I'll do this one here. So there, you just got two lines, right? From February. So this was the range. So set in February of this year to March of this year. And now we've broken out, you see, and it really is pretty nice. You see this last drop below this area. This was the last point of buying in August, which coincides with where the stock bottoms were at. Very convenient. This was when you had the liquidity crisis from the yen and the Bank of Japan raising interest rates. The yen collapsed with the yen carry trade. So this set the bottom, the absolute bottom. This is where all the last buyers are. You can see all the volume that came in here. See, this volume is huge compared to anything before and after it for that day. So the daily volume. Now, once you broke out of this range, you can see why we're just going sky high, right? This was the final move. And you could tell things were going well because of the way things were moving here. Because now we weren't pulling back anymore that strongly. Everything was like gentle pullbacks. Now, if I zoom in to this, like have to use 40 minutes. It's crypto here. Okay. So once we've broken out of this range, you can see the way it's moving now. Very gentle moves up. Then you have an acceleration up here, but still very gentle. After that, everything went crazy. So this thing is very messy. You're just going up and down, up and down, up and down, up and down. And Juan asked me like, oh, should I get back into Doge? And I was like, nah, Like I mean, I'm not saying either way what Bitcoin is going to do. I know short term Bitcoin is going to keep trying to push up, but the way it's pushing up, it's messy. So that means there's a lot of people. Every time it pushes up, there's sellers that are coming in to sell. Every time it pushes up, it keeps selling again. But each time it sells, it's making higher lows though. Like you can tell right away. You see this big final move up here. This low I'll put as important. So we got kind of undercut it a little bit, but we recovered, hit back here Friday, and then we pushed up. Then we have a gentle rolling back down over the weekend. You hit here on Sunday, then you got a strong push up again, and then all Monday it's just zigzag, zigzag, nonstop. And then we push up again, trying to get back to here, to these old highs here. And now we're testing above it. So, I mean, it is going to go up to 100K, but I don't think it'll be clean. It definitely probably isn't going to be clean. So let's look at the 4-hour. You see all this volume here in the 4-hour. So this is a 4-hour candles. So I put in 4 hours for you. So 1, 2, 3. So these 3 candles pushed it up nice and cleanly. Up, up, up. You had one big push here, failed. You see red candle right after 4-hour candle. And then now it's struggling. Now it's going to struggle. Because once you have this, that tells you immediately it's not going to be like this thing right here. Because each candle was smooth right up. But when you have a failure like this, nah, we're going sideways. So, okay, we went sideways. Oh, we got a lot of struggle session here. We got another struggle session here. Getting more volume, though. We're trying to push again. Okay, so we're above it. We're above this range. So I expect it to go up. I expect it. Don't mean no guarantee. But what I think is going to happen is it's going to try to push near it, maybe very close to 100, and then it'll fail again. I think that's what's going to happen because this is not clean, right? This is not clean. But who knows? This range could be actual accumulation for people to push it even higher. But we have to understand that for Bitcoin, the options and futures expiration is on Black Friday. So not like stocks and the index futures, equities in the stock world. Those things end on the 3rd Friday of every month. Bitcoin and I think the other cryptos too, Ethereum, that have major futures and whatever contracts, those things, they end on Friday month. So for the monthly options, it ends on the Friday. Quarterly, same thing. It'll end on the last Friday. So last Friday of the month. So that means Black Friday, the 29th. And if we look at the Max Payne, here, I'll show this to you guys. Here's the link. You guys can look at Deribit, this website here. Okay. And I'll show it on screen. Okay. Does this confuse you yet? What is this junk? What is all this stuff? Okay. I'm not gonna talk about options here. I'm not even an expert, honestly. But what I use this for is that I'll set it to the 29th. And you get this chart here. You see this? Okay, let me hide the thing here. You see this? You see this curve here? This is something called Max Payne. And Max Payne is at $75,000 for a Bitcoin. So what does that mean? This means with all the options that are out here, so you can look at call options in this color, the cyan or whatever, and the lavender is the puts. Okay, these are all the puts that are placed. So all these bets are placed for the November 29th date. So a bunch of people are betting it'll be up here, like 100,000. Some people are betting it'll go back down to 60,000. So who's right? Who's wrong? That doesn't matter. Somebody's selling these options, right? So the market makers, if they want to make money selling options, they're going to try to hit it as close as possible to 75,000. We are now above 75,000. So there's going to be a pressure to push Bitcoin back down closer to 75,000 as we get closer to Black Friday. So I don't know if we're going to hit 100K plus first and then go back down, or we're just going to get stuck meandering in this $95 area where we're just like, oh, maybe it can get to 100K. Maybe it could get, so we're just stuck going sideways again. So even though from a chart reading point of view, we are getting, oh, my bad. Let me see. Let me get back to the chart here. Yeah, so I don't know if this is just going to fail right here, because if this thing on Friday, let's say this Friday, this coming Friday to Monday, so if the weekend doesn't push this up, like we just test 92 again over and over again, and then suddenly it'll just fall back down, then that's it. We're done. Then we're for sure this is what's going to happen. Because my thoughts were that if it didn't make it last week, it will come back to 86, 85 area, 87. But since it survived the weekend and pushed into Monday, yeah, it was going to go up here. So for all you guys that traded this, Mara was a great trade. So Mara, let me put this chart back up here. Mara. So Mara had news. So this is the problem with crypto stocks with Mara, like Mara. See, so after it had earnings, right? Earnings weren't good and whatever. Later on Monday, they decided to announce that they were going to issue more shares. So of course, it's stock dilution. So you get stock dilution. So it's issuing more shares. So it goes down to here, conveniently at an old support area. Okay. So this is an old support area. I drew this dashed lines here, and it bounced back up. Here, it's probably more clear on this chart. I redrew it on this chart here. See, so these are two areas you should focus on: $18.50, $24.50, around there. So it's bouncing between this area now. Once it got into it, so probably a ton of idiots probably shorted when it went below 18.5, thinking like, oh yeah, Bitcoin's gonna crash. This thing's gonna crash. Easy money. They got burnt. So these past 2 days they got burnt. They got killed because Bitcoin did not crash. Bitcoin still is trying to get to 95K. So that's why this thing bounced back. But I think we're at the end of this move, so I would probably caution people to start selling some. If you did this trade, good on you. It's quite obvious trade too, because this thing was, when you look at the daily chart, you have the moving, rising 40 daily, 18 daily moving average, and then if you look at the weekly, like it touched the falling weekly 18. It went through the 40, but it touched a week. So yeah, this thing is going to take some more time. We need this to build more energy to come back up, because I got in down here when it undercut the 1450 area and went down to 13. That was a good buy. So around 13 to 14 was a good buy, and getting out at 25 on the election day pump, that's it. That was the first initial move. That's the first initial move. Now we have this larger range to consider, right? This is a larger range. So if Bitcoin will go up later in March, April to like maybe 200K, who knows, right? At that point, then this thing will definitely fly. And it has a lot of history up in 78, 80 during the 2021 bull run. But I'm still cautious because I'm not sure about the NASDAQ at this point. I don't know how much juice the NASDAQ has to go up. T-Spell says she got funded by a prop firm. I'm going to stop trading after December 16th. Okay. All right. Yeah, time to take a break after that. Once you got your money for the year, you're done for the year. Up to you how greedy you are. Some people want to chase that paper. But yeah, you gotta find the times to get in and get out. I mean, I have no idea if it's going to get to 170 again, honestly, because it has too many stock dilutions to reasonably push this stock back up. There's way more stock now out in the market than it was back then in 2015. So that's kind of really hard to expect. 70, 80 area is a lot easier. So going from 20 to 70, 80 is definitely doable. And if there's a lot of liquidity, yes, it can go above that back to the other higher ranges. But we have to start looking at other things now. So CLSK, definitely this one, has a history of probably 80. So it's at 14 right now. So I'm waiting for this. Its earnings is in December though, so I have to wait on that. And MSTR. So this one, because it's not a miner, it's not restricted by how it does its business on mining. Michael Saylor just uses the stock to buy Bitcoin, and the Bitcoin price itself props up its stock so he can continually buy Bitcoin. And now that it's above its resistance in 2000, the year 2000, it can do whatever it wants now. This is perfect. This is what you want to see. So I would watch this. And if you want extra juice, you can use MSTU. MSTU is 2x MSTR. Okay. So here it's up 100% in the week. MSTR is only up like 44%. So it's roughly 2x. That's what I'm saying. If it's smooth, if it's a smooth move up, yeah, it can do 2x or better. All right, that move. So if you don't have options or the options on MSTR don't look attractive, but it's going to go up, then yes, you can use this ETF, MSTU, the one stock ETFs. They have a lot of these one stock ETFs, like Tesla has one, right? Tesla here. Okay, Tesla is a breakout right now. So it's broken out of this range of the 283. So last time it tried to break out was in October 2021, failed, came back down. Now it's back up. So if you think this will continue on into next year, then you could try TSLL. TSLL is the 2x of Tesla. So TXLL from the last week till now is up 75%. So yeah, if you don't do options, but you just want to do it that way, see, it's up 35%. So it's roughly 2x using TSLL. So yes, I put those in the description. So if you look at the description, I have a lot of lists of tickers. So if I don't get around to them, you can go look back and see what I wrote down, and you can look at the chart themselves. And the speculative one we're looking at is GameStop. So GameStop I've been recommending for a while now. Finally, it's gotten above 28. So we just hit above 28. This is crucial, very crucial. So if there is a lot of liquidity in the market, I suspect, here's why I say it's 28, because this area here, there's a lot of congestion here. So let's just draw this. See that? Once it breaks out, it's going back up to the 50s, right? Or 60s. I don't know if it's going to hit that, but this was the absolute high in 2024. I think that was the absolute high, close to the absolute high during the meme era. Yeah, so it was touched there like several times in the meme era. And the first initial meme era pushed it up to hundreds. This is after the split, so you have to multiply these numbers by 4 to remember what the old prices were, but it got up to $400. So after the split, that's equivalent to $100. Okay, so I don't know if it's going to $100 or more, but I just tell you, when I look at this chart, I'm like, it's making a base, it's doing its range, it's at least going to try 60 again, and if it holds it, bum, 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 then it moves up. So yeah, so if we're entering the meme era once again, with all this stuff, all the money flowing in, Bitcoin and all that, then yes, I fully expect it can easily do it. Because let's look at these stocks here, the quantum computing stocks. They are going crazy, really crazy. Stocks like these, when you monitor them, same thing with the space stocks, like Rocket Lab, Lunar. We talked about these stocks over the past week or so. So I put them in the description, all these tickers, so you can look at them yourself. I personally, I can't say I would play them. It's kind of like KC, right? I notice them, I see them. Like if you have time and You want to trade them? Go ahead. You're gonna take your shot. They have good looks to them. Like wait for a pullback right now. KC definitely you gotta wait. You missed your chance here at 4 for KC. The other ones, yeah, you gotta hold out and wait a while. Yeah, these things, yeah, you gotta wait a while. I don't think anything. PL is the only earnings left. Planet Labs, yeah, Monday, December. Yeah, the other ones, all earnings are done. They're all done. They're all done. So you gotta wait a while. Yeah, wait a while. See what happens. But like going into next year, they might do really good. So that's why I was recommending, like, watch these ETFs, the XBI, like see how they do. Because here, this is just the RFK news plus the options expiration. So this is why I did this. So I'm not sure if this is a real move or not. This is probably not real. It'll probably recover. And then once I see this area move up, and the same thing with ARK Invest. So here, ARK Invest looks a lot better. So I did analysis like last time on Friday, I believe. So Friday show, I did analysis and I showed you where this thing can go. I think I said it would 180, 100, so 96. So probably about 100 plus, so 150, right? 150. So ARK, so maybe 150 or something like that. $100. Yeah, 100. Yeah, 150. Yeah, so maybe you can get all the way back up to the top here. I mean, that's kind of optimistic, but yeah, you can go back to the analysis. I don't think I was that optimistic. I think I cut this in half and said it could just go up to like 120 or something. Like, yeah, the move. I didn't want to like go up to 150. It's maybe 120. But anyway, you could buy TARK. So TARK is 2x ETF of ARK. So if it moves up in this nice straight line, then yeah, you can go to up to 80, up to like maybe, I guess I said 200, 300, something like that. Yeah, you go back to the other stream. You'll see what I targeted. So TARK, TARK, and it's scrolling on the bottom here. The ticker will scroll on the bottom. So yeah. Anyway, this man. So anyway, oh yes, John Galt, White John Galt wants to say short Nvidia, all this stuff. Honestly, I don't know. I don't really care. I already made my money for the year, so I don't really care. Whatever here is extra money. If the stock market wants to crash right now, then so be it. Then I'll just buy up for New Year's next year. If it doesn't, then fine. I'm not gonna speculate that. I'm not gonna speculate on that. I don't know why he's so gung ho about like trying to get people to buy puts or whatever. You know what? You know what'll be funny though is that nothing happens. Like there's so many bets going one way or another because you saw what I showed in the video. It's an Nvidia can go up and down 12%. I've seen so many times in earnings when it goes nowhere. The next day it does nothing or something. It's just moving to kill all the puts and the calls together. You know, because the market makers will be like, oh, you guys making these big directional bets. See ya. Yes, it is speculation, White John Galt. Everything is speculation. You have a crystal ball, White John Galt? If you have a crystal ball, tell me why you're here. Why are you even here? Why even bothering? Because, you know, you're just going to incur the Cassandra effect. Because whatever you tell us will happen anyway because you have influenced the outcome of the results. So if you know mythology, you can look up the Cassandra effect. Anyway, yes. So I'm not here to do that. I'm just here to scenario with you guys. You guys can do what you will with it, trade either way. You just need to know the levels, you need to know where the trends are, and that's it. That's all you need to do to make money. So that's the easy way. So if you want to do be a hero and guess which way is what, then go. By all means, do so. So let's see. I got some more videos to show you guys. Oh yeah, Target earnings pretty bad news for the consumer, I suppose. But yeah, DJT was gonna buy out. So I played that video already. The DJT, so the Donald Trump media is gonna buy out Backed. So that move is done. I remember Backed. I played this thing in 2021 or something like that. Did I? I tried to play this thing a couple times. I was like, oh man, this thing sucks. So I just said, forget it. This thing makes no sense. So yeah, anybody that bought in like April here probably real happy because it finally popped. It finally popped up to 35. But yeah, there's a lot of people that lost money on this one. So BKKT, I don't know if the rumors are true or not. So it looks like DJT now is getting to crypto. So this company is now holding crypto stocks to take Wall Street and give back to the people. It's like, what are you talking about? Take from Wall Street? You can never take from Wall Street. You can't give to anybody, man. Are you playing? No, I don't play earnings. Man, I'm not a gambler. I told you that's speculation. I don't play that shit. I already made my money, bro. Like you should have did SMCI. That's done, man. That first move. The rest I'll gamble. Yeah, whatever profits I have left over. All right, maybe I'll leave the rest for 60, but I'm done. That's speculation, baby. We're done with that speculation. You already know this thing wasn't going to get delisted. So no, I'm not going to play earnings seriously. If I do play earnings, it's just a gamble because I already got out. Like Zim, right? Like Zim, I was already in from 18. I already sold right into earnings. Left some on the table for earnings. It popped for earnings, sold some more there, pulled back. Now I'll wait and reconsider if I want to get in that. But yeah, earnings, I do not play. I don't recommend it. I don't care about it. I don't do that stuff. I do not touch Chinese related stocks. Zim is not Chinese. It's Israeli. Small hat. So anyway. And if you didn't touch Chinese related stocks, well, you just missed out then. It's KC. Very nice. You got $2, $3 to $6 if you knew how to read the charts anyway. So yeah, plenty of fish on the sea. Oh, as far as international things, I'm looking at EWW. That's not on the ticker or in the description, but I might as well mention it. So I traded this one for Donald Trump when Donald Trump won, bought here, sold here. And I used the leverage ETF MEXX. Okay, so the non-levered one is EWW. I don't know what the options market looks like there, if it's high liquidity or not, if it's well traded. But if you don't, yes, you can look into trading with MEXX. So I'm watching this one to see if I'll re-enter. But we have to look at when you look at international stocks, you got to look at the dollar. Dollar still looks too strong right now. The only tailwind, okay, you got to learn that word tailwind from international stocks comes from the dollar. As long as the dollar is still too strong, yeah, you got to avoid most international stocks outside the U.S. that are priced in dollars. Anyhow, yeah. So there you go. Quick summary of that. Also, same thing with the bonds. Watching this one, I already bought some. So TMF is the one 3x. This is 3x. Oh man, did I say 2x on MEX? MEX is 3x too. Okay, MEX MEXX is 3 times the move of EWW. Okay, and then TMF is 3 times the move of TLT. All right, TLT, the bond, the 20-30-year bond. So now it's making its range. I think Samantha, she was saying like, yeah. So Samantha Leduc, she was saying like it was gonna go back down. If the bond market is gonna crap out again into December, then probably TLT will hit 87. So, but yeah, watch that. I've already bought some positions already here, 45. So I'm waiting to see if this makes sense to buy more down 40 or something like that. So don't buy too much because yeah, the bottom's not finished probably. So watch out, because as long as the dollar is still too strong like this now, yeah, bonds will also get hurt. So yep, keep that in mind. Okay, we have less than 30 minutes before the close. Let's see what's other videos we got to play. Okay, more Bitcoin video. Here's another Bitcoin video for you guys. Already played that one. My bad. Now I gotta play another one. Bitcoin, another one. Nope, played that Bitcoin. Here's another one. Yep.
Primary exchange for IBIT. So
Yes.
you have basically the greatest launch of all time up and running on your exchange. And now we just got word over the past couple days that after the SEC approval, CFTC has approved and OCC I'll let you deal with those acronyms. But this is like the bureaucracy that you have to go through to get options to be approved, especially for a 33 Act ETF. It's a little tricky, but it looks like all systems go. When can investors and traders expect to have options on IBIT and the other ones?
Well, first, I couldn't agree with you more, Eric, on the success of IBIT and really all the spot Bitcoin ETFs that we've seen come to market going back to January. IBIT now over $40 billion, larger than the iShares Gold Trust ETF. It's, I think you pointed out last week, larger than the 2,800 ETFs that have launched in the past decade. So what a momentous milestone. The options development on IBIT is something that we've been working on over the past 10 months with BlackRock, with the regulators. And so, as you said, over the past few days, the CFTC did put out an advisory on their stance with these with the options listed on IBIT. So we're working very closely with BlackRock and the OCC on these final steps. We've put out the necessary listing application documentation. And so our intent at NASDAQ is to list and trade these options, as early as tomorrow. So it should certainly be an exciting week. It was exciting enough to have these spot Bitcoin ETFs launched earlier this year, and then we had the Ethereum ETFs in July. So I think kind of this next step is just rounding out that digital asset ecosystem for ETF investors.
That's really interesting. So potentially as soon as tomorrow, watch this space. You mentioned that this is something you've been working on with BlackRock and the necessary parties for 10 months. You think back to the experience with the Bitcoin futures ETFs. It didn't take long at all to get options listed on those funds. I don't know if you want to speculate, but do you have any opinion as to why it took this long?
Yeah, I mean, no real speculation. Like Eric said, the structure of the 33 Act that these spot Bitcoin ETFs are structured in just is some added, regulatory, approvals that need to be had. But again, up until this point, like I said, our, strong engagement with these different regulators as well as the BlackRock team led us to this, successful, decision. And again, getting these options listed on IBIT into the market, I think will be, very exciting for investors because that's really what we've heard from them.
Oh, yes. So now we got options on ETFs. So you have the ETF based off of spot. You have an ETF based on the futures. Then you have the options based on the futures, based on the spot, based on the ETFs. On the oh man, great. This means there's so much exciting fuel for the fire. These things can create so much squeeze and dumps. The volatility will be so high. Beautiful. So let's see how Bitcoin does in the coming year. Get ready, get your money ready, start grabbing the dollars that'll start flying. I can't say too much about that anymore. Pure speculation. Everything is driven by emotions, and this will just add to them. Okay, so let's see. So I think we're done with the Bitcoin stuff right now, and we're gonna go into Walmart or something like that. I think AI. Okay, first AI first, and then we'll get to Walmart.
Exclusive interview is Tom Siebel, CEO, co-founder of C3 AI. Tom, good to be with you here in Chicago. So it's the go-to-market part of this that I think is particularly interesting. Oh, it's all interesting, but tell me what selling with Microsoft and developing product with Microsoft is going to do for what you've already built at C3.
This is a huge tailwind inflection point for C3 AI, and I think an inflection point in the enterprise AI industry. So as you know, we've spent 15 years. We started before Azure, before Google Cloud, before the GPU, now building, I think, 130 turnkey enterprise AI applications in order of 100 generative AI applications for mining, for banking, for supply chain, for manufacturing. All of those applications starting tomorrow are being sold by are available for sale by the entire global Azure sales force. So in December, we'll be jointly selling to 100 accounts. I suspect in a year we'll be jointly selling to thousands of accounts where we're teamed together using Azure, using the C3 AI applications. And between Microsoft and C3 AI, we can guarantee the customer's success.
So this industry approach to selling AI, it really seems like things are going more that way. It's not about just having generic LLMs or generic models. You got to be able to do specific things within your industry. How much of that in your conversations with Microsoft are driving the expectation where growth is going to come from, where value is going to come from for some of these customers?
We're in meetings real time this week, next week, the week after, last week, focused on federal, defense, intelligence, manufacturing, pharmaceutical, chemicals, oil and gas utilities. It's very clear, that Microsoft goes to market with a very industry-centric focus. C3 has always gone to market with an industry-centric focus, and we are delivering now combined, industry-specific AI solutions that address the value chains of all these verticals, very, very tightly integrated with Azure, supported by Microsoft, supported by C3. This is huge.
Tom, it's Morgan. You just mentioned defense, intelligence, and federal. And so that's the question I'm going to ask you, because there is this focus on incoming Trump administration, what it's going to mean, especially with DOGE coming into being here, what it's going to mean for the companies that do contract with the government. Maybe not so good, at least based on what investors are gaming out right now, potentially for traditional defense contractors, but maybe great for dual-use technology companies like, for example, a C3 AI that can maybe realize greater productivity within government. How do you see it?
I suspect you're right that the new administration will dramatically change the way they procure weapon systems and what have you. That being said, with Elon involved and many of the people involved in the administration, you could be certain they're going to triple down on AI for space, for subsurface, for hypersonics, and the military system that they built will be entirely centered around AI. And I suspect that C3 will continue to be involved in many of those discussions.
Oh, was I muted the whole time, man? Shoot. God damn, do I have to do everything again? What would I talk about? APLD. Let's see. APLD. Okay, I talk about APLD. This one I said don't know what it is. RX, and then talk about serve. Yeah, the other one. NNOX. Okay, this one I said this is gambling stock for tomorrow for people that want to gamble. And I said the history is up and down here. Yeah, I played this thing from 20 to 80 back when it first came out. Yeah, some people started keep playing it down here at the bottom levels here. This is just trash. This is a trash stock. But NVIDIA is invested into it. Like how many shares? 59,000 shares. Not much, but it's a token. It's a token play here. I guess it has some faith in it. And then, okay, what else I taught? APLD. Yeah, APLD I don't know too much about. I said, so it had no history before 2021. And then now it's getting more volume because of NVIDIA. I think I also said, yeah. So before the 2008 times, it still, yeah, this stock is complete. I have no idea what. Yeah, it barely had any volume. And once it went to penny stock status, like, it probably was delisted at one point, I'm sure. I don't know what this. I don't think anybody would allow a stock on the NASDAQ to trade below $1 for this long. So yeah, this is a strange one. I don't know too much about it. But yeah, apparently NVIDIA is on there. Okay, let's see. What else did I mention? We talked about RX. So I said I'm going to buy something there because it's in between the ranges. So I'll buy something there. Okay, that's good. So anything below 6, yeah, you start buying. It'll go back up to the top of the range. So, okay, we're back here. I'm going to talk about the news. So hopefully that's what I covered while I was muted. Let's see. Okay, let me pull up the press release here for RX, and then share the screen. Okay. Man, these things you need a producer for when you do these streams. Yeah, crap, man. Someone else has to handle all this back stuff. Like, pull it up, Jamie. Pull it up, Jamie, like Joe Rogan does, man. He's like, oh, I can't be doing this all myself. All right, pull it up, Jamie. All right, here. So Recursion and Exscientia, 2 leaders in the AI drug discovery space, have officially combined to advance the industrialization of drug discovery. Recursion unveils post-combination technology-enabled portfolio with more than 10 clinical and preclinical programs, 10 advanced discovery programs, and more than 10 partner programs, blah, 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 blah. So I think it had a YouTube presentation and other things today. So you can read it yourself. This thing produces drugs through AI. So they're using AI to develop drugs. Pretty interesting, huh? Here you go. You can look up at the YouTube link. So this is the press release. You can use Seeking Alpha to get your press release. You can use whatever things you want. Here's this fat link here. I don't know. Holy crap. Oh man, yeah, this link goes to a freaking tracker link or something. God dang it. Oh my god, yeah, you can't use this. You can't use this. Okay, let me get a clean YouTube link then for you. Man, I hate web developers. Why does everyone have to track where I come from? I'll have to add a cookie. Yeah, now your browser is full of spyware. Great. Track me all day long. I hate the modern internet, man. All right, 9 minutes until the market closes. Okay, here we go. Here. See, this is the correct clean link, not this junk trash they try to feed you. YouTube at Recursion Pharma. Okay, go over there. They probably have this broadcast somewhere on their channel link here, and they got a whole bunch of things. Look at that. Look at the partnerships here. What partnerships they got? NVIDIA, Google Cloud, Tempest Helix, Enamine. What the heck is this, man? We got Roche, Genentech, Sanofi, but Bayer, Recursion. Oh, they have their own operating system. Yeah, check out. Maybe you'll be convinced to buy it. Heck, do I know? No, I don't bet. I don't gamble, bro. What the heck? Why you even bother gambling, side betting? Why don't you just gamble on the market directly, man? There's a market. That's what the market is for, betting. You can bet on it right now. Why are you betting with me? What the heck? What the heck is even the point of doing that? You want to just stroke your ego or something? Like, this is not the place for it. This ain't the place for it. Here we go. So, not the place. Let's talk about Walmart. 8 minutes till close. Sir, the stock market is like a casino. Yeah, that's why I play in it. I'm not playing with you. You're not the casino. I already made my money before the casino even did its thing. Here's a tip, White John Galt. Just make 7 figures, okay, and then we can talk. All right. Anyway. So anyhow. Let's see. Okay, Walmart hits all-time highs. All right.
Tripping to another all-time high today, the retailer lifting full-year revenue guidance after beating top and bottom line estimates in its latest quarter. Walmart seeing gains in discretionary spending and home deliveries, and even saw a bump from holiday shopping. For more on Walmart's strength, let's bring in Bill Simon, the former Walmart U.S. CEO. He is now on the board of Darden Restaurants. Bill, great to see you again.
Hi, Melissa. How are you?
I'm good. By all accounts, this is a strong quarter across the board. And what was, interesting was the continued gains in the higher income household. I remember you saying way back when that those gains might be difficult to hold on to as the economy improves, as shoppers return to their normal habits. Could it be different this time around?
You're right. I mean, historically, they keep a percentage of those customers that gain, the high income customers, but the vast majority of them sort of migrate back to service and it's kind of a premium product when the economy allows them to. So the fact that they're sticking now sort of suggests one of two things. One, that they're not ready to move back yet, or two, that Walmart got a good shot at them and kept them happy. And that would be a real monumental positive change for them if that would be the case.
Bill, it's Karen. Thanks for being on today. So furthering that point, the e-commerce sales were really strong. And I didn't see the data. I don't know if you would know the data or take a guess of how much of those e-commerce sales are from that today. So furthering that point, the e-commerce sales were really strong. And I didn't see the data. I don't know if you would know the data or take a guess of how much of those e-commerce sales are from that wealthier shopper, which I think it might be stickier once you sort of are used to doing it and it, maybe replaces Amazon or you do it alongside. Do you have a sense of how that shopper figures into e-commerce?
Yeah, I read through the report. It didn't give you that data point specifically, but it did say that much of their gains in e-commerce were from an improvement of the home grocery home delivery, an improvement of the home grocery home delivery business. That's debatable whether it's going to be the high-end customer or not. I mean, it's primarily a price-driven customer, but so many more of their customers, as they indicated in the report, are paying extra money for premium delivery service, which would support the point that higher-end consumers are buying more online from Walmart and maybe providing Amazon with a little digital competitiveness.
Bill, one of the reasons why we love to have you on is because one might think that you would be biased to Walmart, always preferring Walmart over Target, but that has not been the case. And so I'm wondering, when you think about Walmart's valuation and you think about historic PEs, Do you say Walmart is much more expensive than it has been historically? Think that you would be biased to Walmart, always preferring Walmart over Target, but that has not been the case. And so I'm wondering, when you think about Walmart's valuation and you think about historic PEs, do you say Walmart is much more expensive than it has been historically, or do you say, you know, Walmart is in a different business model now? It's got Walmart Plus, it's got subscription revenue, it's got advertising revenue, it's got a DTC business, and so therefore the valuation should be higher. We have to re-rate Walmart and stop comparing it to the historic PEs.
I think you're right, Melissa. I mean, like, if you just evaluate them as a retailer, there's no reason that the valuation that they're holding currently would apply. You know, in fact, they mentioned again in their report, probably the third or fourth time, that they're approaching profitability on their e-commerce business, which means they're still not profitable. And so they've been pumping money, capital, CapEx, operating loss into this business for going on 10 plus years now. And maybe they're starting to see some of that impact. And the valuations of a digital company, a digital business, are substantially higher than the physical businesses. Because if you compare category by category, Walmart's physical retail performance to Target, they're not dramatically different. In fact, they're really quite similar. The differences in their result are Walmart has a much more substantial digital business. It has a much larger food business than Target, which is growing at a higher rate. And Target, when they did their deal with CVS a few years ago, kind of really got out of the pharmacy business, so to speak. So those three categories are providing substantial growth and value to Walmart now, and Target's lagging.
Welcome back. Shares of Target are plunging today, having their worst day since May 2022. That's after the company posted its biggest earnings miss in 2 years and cut guidance. Target COO Michael Fidelki telling me earlier that they saw softer than expected discretionary performance in categories like apparel and home, which are usually more profitable, so they lost margin there, which showed up in the bottom line. For more on the quarter, let's bring in Bernstein analyst Jihan Ma, who initiated Target at market perform last month. She was cautious going into the results, saying there was a risk of weaker sales. Jihan, it's great to have you. It wasn't just weaker sales, it was the profit miss that I think surprised so many on Wall Street, that margin miss. How concerned should you be about it, and what should you do with the shares down 21%?
Yeah, no, thanks for having me. I would say it was definitely a messy quarter, to say the least. On the profitability side of things, what happened this quarter was that Target posted pretty weak comp sales growth of just about 30 basis points. That was somewhat well understood based on the alternative data that people had going into the quarter. But if you look at the composition of the comp sales, it was almost entirely driven by e-commerce, which is a loss-making division of Target, versus brick-and-mortar store sales was down about 2%. So that in itself was a pretty big margin headwind for Target. In addition to that, as you mentioned, the category mix, where the higher margin discretionary categories posted negative declines this quarter, also hurt margins. So between the two, we did see both the top and the bottom line miss for Target this quarter. And part of my view is that some of that may continue going forward.
But you also initiated with a market perform and a $167 price target. So do you think that shares are getting punished too much?
Yeah, so what I would say is, on the one hand, we are seeing Target lapping some really easy comps. We are still seeing a number of gross margin recovery levels.
Yes, that's a correct move, HB. Yeah, you should have sold that today, because if you bought it on that dip, then yeah, you would have just sold it. That's a good scalp right there. So yeah, anyway, market is closed, so let's see how it goes. Let's see how it goes. Play that back.
With a market perform and a $167 price target. So do you think that shares are getting punished too much?
Yeah, so what I would say is, on the one hand, we are seeing Target lapping some really easy comps. We are still seeing a number of gross margin recovery levers they can pull, right? They've experienced major shrink. They have experienced a lot of category mix, which has been a margin headwind, and they're growing alternative revenue streams like Roundel, all of which can contribute to their margin recovery from the trough level in the recent year or so. That being said, I think some of that is going to be offset by the need to continue to invest in pricing, the need to continue to grow e-commerce, which is why overall, from a gross margin perspective in the out years, we are below consensus. The near term, I continue to expect some bumpiness. There could be a quarter where they outperform. There could be a quarter where they underperform. Longer term is a kind of a more medium to long term question I have in terms of can they exceed those top line and margin expectations at the same time, given the need to reinvest?
Long term, I mean, a lot of questions this morning about the degree to which they should change their mix, if they should get out of grocery or double down on grocery, just given the ferocity of the competition. Is there a clear view on that at Bernstein?
I would say we're expecting them to see a bit more of a category mix normalization going into the next couple of years, as you can see in our initiation note. That being said, based on the current consumer sentiment, it clearly looks like consumers are still seeing their spending power constrained. There's still a kind of a lack of interest in spending on a lot of the bigger ticket discretionary items. In addition to that, I think another more nuanced consideration is if we get another round of tariffs, what could that do to discretionary price affordability, and could that delay the expected category mix normalization? So it's not like we would expect Target to artificially say we're not going to normalize our category mix. They are trying to grow food and beverage a bit more to drive traffic, but also hoping that they can reach a more balanced growth on the discretionary side. How quickly that can happen, I think, is a big question from here.
Beauty has also been really strong for them. I asked Fidelki about the tariff question, and he wasn't as specific as we got from Walmart. Walmart said 2/3 of their goods are made or assembled in the United States. What do you have any idea of what that looks like, that kind of exposure for Target in terms of China-made goods?
No, I was not able to get a specific number from Target on that front. I think how we triangulated it is basically it's largely proportional to a company's discretionary exposure, right? So your consumables are largely produced, sourced domestically. Your discretionary goods more likely to be sourced overseas. Target, within my mass club coverage, has the highest discretionary exposure. So I think in that sense, directionally, we know they're likely the most exposed to potential tariff risks.
All right, Jihan, thank you very much for joining us with the initial take here on.
Now to some big moves for retail stocks. Walmart hitting a record high, finishing near the top of the Dow after reporting solid Q3 earnings this morning, driven by strong revenue growth. Company also raised its full-year guidance, and Lowe's is moving, though, in the opposite direction, despite beating on the top and bottom lines. The company said it's expecting sales to decline in 2024. Let's bring in Telsey Advisory Group CEO Dana Telsey. Dana, welcome. So it sounds like from the commentary out of Walmart, conditions overall for the consumer aren't changing much. Consumers sort of hanging in there. How does that bode, do you think, for the holiday season kicking off in just about a week?
Thank you for having me, John. I thought Walmart's results were terrific. It really shows what they're doing in order to activate the consumer. Keep in mind, they just got a bigger share also of some of their higher income households, and so they're gaining share in a time when the consumer wants value. What does it mean for other earnings coming up? Frankly, discounters and off-price are what's working. I expect tomorrow when we hear from TJX, we'll continue to hear traffic drive the sales gain. I'm looking for sales to be up in excess of 5% for TJX. And I think, keep in mind, general merchandise improved at Walmart also, which hopefully bodes well for Target. But Target has 48% of their sales allocated to general merchandise, whereas Walmart, 60% is to grocery and essentials.
So what about Lowe's, especially in light of what we heard from Home Depot? What's the sense around some of that bigger spend, and maybe that spend that's not necessary to get through the day or through the week?
I think overall, when you think about the home improvement retailers, the inflection point isn't here yet. We need continual rate cuts in order to be able to drive an acceleration in the top line. And think about what you saw at Lowe's, where the big ticket goods still didn't work very well. They were softer, yet they were able to raise their sales guidance while trimming the operating income a little bit. I think you're not at the inflection yet, but you're on your way, both for Lowe's and Home Depot.
So Dana, looking to Target specifically tomorrow morning, I realize it's probably the most direct peer to Walmart, but it also tends to be more skewed toward discretionary spending as well. So not only the read-through from Walmart, but also what an incoming Trump administration is going to mean for some of these big box retailers, especially names like Target, where tariff exposure could be potentially large.
Yep, when you think about the tariff exposure, it's something we're very concerned about. We just wrote a big piece on it. Overall, what we're seeing is, look what Walmart said, 60% of their goods are made or grown in the U.S. You take a look at Target, where 48% is general merchandise. They're going to have work to do. It's been said that certainly with tariffs, apparel is going to be one of the areas that needs to diversify the most. And with those tariffs that could be incoming up to 60%, could we see double-digit price increases? That's not good for Target or for any of the apparel retailers. And that's why you're seeing more of them accelerate the pace at which they diversify their sourcing. Product innovation and newness is definitely what matters. Target certainly has that with a lot of their collaborations and partnerships, but price matters also. We saw in the last time that tariffs were increased, companies were able to navigate, but you're watching in order to be able to see how much do you have to raise those prices, and that still remains to be seen. When you think about 2025 guidance that's given in January or February when companies report their holiday sales, we could see operating margin pressure from the tariffs, given it's not for free to diversify your sourcing, because as many say, there's no China like China in producing these goods at lower cost and expertise in manufacturing.
Oh man, diversify sources. Jesus Christ, man, Jesus. Anyway, we'll see how that goes for retail in the coming months. Donald Trump's not in yet, so still don't know how targeted those tariffs will be, or will be more broad. Quite good, quite good, quite good. So anyway, let's see. So I was muted for a little bit, so let me go back to go over those stocks again with the AI stuff incoming. So let me do it again for you guys that were here. So let's see. I covered sound a little bit. I said, like, yes, I traded this from 2023 to 2024, right? This March. Yeah, so around October to here. That was a good move. One of those good moves. And this was the time when the NASDAQ was really good. This is why I'm kind of hesitant about doing the same type of plays I did before with these trash stocks, like going from now until first quarter, like at least next year. I don't know. But we are back up here. It is making that move. I mean, we got NVIDIA earnings. I don't know how that's going to juice the market or not with this AI bubble stuff. So, yeah. So, and we covered AI, C3 AI. We had a video over it. We got to see how this does, for its own earnings, December 9th. And then there were some other ones, ALPD, APLD. I was looking at this stock and I'm going like, what the heck is this chart? This looks disgusting. But NVIDIA has bought shares in it for some reason. So I guess I'll have to keep this on the watch list now. RXRX. Yeah, we talked about this one. So you can go back and hear the article or the press release. I kind of went over and I gave the YouTube link to their website, channel, so you can watch what they do. Recursion Pharmaceuticals. I just used a chart for the range because it's nice when you do this range. So I don't believe it did a good October. It's not clean. This was another October to February move. You see that? So from the quarter of Q4 of 2023 to Q1 of 2024. So I don't know if it's going to repeat that, but hey, if it's below $6, I'll take a shot at this one. And then the other thing I wanted to mention about sound was that the way it's moving up now, you kind of see this, it builds a range here. It's not very clean. But it's similar in the way how Palantir did too. So in between earnings or within the earnings, sometimes it just had this stair step type of shape where it just makes a big range, goes back up, tries to do another one, goes back up. So once it broke out of here, this bottom, then it did that. So I'm not saying sound can do something like that, but it's possible. It could start doing a stair-step type shape too. So this is one of the stocks that NVIDIA is invested in. Serve is another one. It doesn't have much history, so I cannot say anything about it. I don't think I mentioned it when I was muted, so I just mentioned it now. This is another one. Doesn't have history, so I can't say much. But yes, you can put that on the watch list too. Might as well. Might as well put that all into AI, NVIDIA. So I think two stocks I wanted to cover again. The psychedelic stocks. Yeah, that was the other one. A TAI. ATAI. So it got pumped on the RFK appointment and earnings, and now it's giving it back. Put that on watch. If it comes back down to $1.30 or something, maybe I'll take a gamble. Okay. And MNMD I already bought. Like it hit here at $6.75 around that 18 moving average, about halfway in this bar, and now it's back up to $7.50. I'm not sure if I'm going to add it just yet. I have to wait for the XBI. So watch the XBI ETF. If these stocks here do not push this ETF back up to 100, I would say the conditions are not good yet. I'm not confirmed because I don't like that. Like when a chart does this move here, it's like a quick. I mean, this could have been just a reaction from RFK and the options expirations for the month, but whenever you see something like this means it's gonna go down lower. Like you go right through it, go right back to this resistance here. You move up a little bit, right? Let's say this thing goes up to 98 or something. It just drops back down to 84. Like it just does a zigzag ABC, right? ABC. So always it's going to go through that pattern, ABC. Every time, ABC. So every time you see something like that, think of an ABC pattern. Okay. Hopefully you understand what I mean. You get DXZY. DXYZ. What the heck is DXYZ? DXYZ. No, I don't know what that is. Was that an election play? I mean, apparently, prisons were an election play. This one was up 75. So GEO Group, GEO. I mentioned that before. So I did not play. I was just playing crypto. I don't know what the heck. Destiny Tech. All right, is that something interesting to look at? All right. Okay, you guys want something? Let's see. Look at DXYZ. Okay, White John Galt says, why do you play penny stocks? I don't play penny stocks primarily, but since people are interested on my opinions on them, I will do that. So, because it doesn't matter if you play it or not. Everything has a chart. If you have a chart, you can trade it. That's the rules of the game. If you have a chart, you got a picture, you can figure out how to play it. I don't care about fundamentals. I don't care about nothing else. I just look at a chart. I look at a picture. There's fractals, there's patterns. You see the patterns in the world. You see the patterns in the charts. They have cycles. They move in rhythms. You know, they say history doesn't rhyme, but doesn't repeat, but it does rhyme. So there's always a repeating pattern of some sort. So it won't be exactly the same melody, but it might have, inferred same scales and such. That's what it is. So no, I don't know what the DXYZ, so I went over that. But I'll look into it, see if it's any worth it anymore. Not sure. Let's see, anything else I gotta do? I think I covered XBI. Oh, Nova. Speaking of penny stocks, this is not exactly a penny stock, but I was talking about this one. Yeah, see? So this one with the solar stocks getting murdered after the elections, this makes a really good trading vehicle. You see how quick it moves up and down, up and down. So it's building a base here. If you're willing to take a shot, I would definitely keep watching this. I don't know what news was today, but it looks like whatever. Maybe there was no news, but See what the TAN ETF, yeah, murdered, completely murdered. So right about now, a lot of people are selling losing stocks for tax reasons. So when you run out of people selling a stock, it should have a good bounce. And Nova is one of those stocks I'm looking at for a trade. So this can be a trade. Let's see. Nova. Yeah, it's right on this area. Yes, 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 yes. On the weekly chart. Ooh, it can go to 4 to 7. No problem. And then from maybe it'll bounce around 6 to 7 before moving back to 9 to 12 next quarter before earnings. So maybe in 3 months, you could trade this up. So between the earnings. So this is how you make. I don't play earnings. I could just play between earnings, right? You can just play between the earnings. There's huge moves between the earnings, and you can just look at the chart and be like, well, all right, now it did this. And same thing with like marijuana stocks. I discussed it a few times. And the American marijuana stocks, you have this nice reaction when you had Chris Christie say the GOP is not really against marijuana. Don't worry, guys. And then they got Matt Gaetz trying to get, I don't know if he's going to get confirmed or not, but this is going to be one thing that is important for marijuana stocks is if Matt Gaetz gets in. And so that's the thing. So that you have catalysts coming through. And when you see a hammer candle like this, in the support area like that. And so if you want to look at individual penny stocks in the marijuana sector, go to MSOS and look up what it holds. Okay, so holdings. So all right, here. Okay, here's the website. You can go to the official website. MSOS. All right, you can go look at that. So here's the chart. Okay. So you can see the MSOS. Yeah, I think that's looking good. You got the hammer candle on the support. And then the Nova. So I'm talking about Nova. Nice looking thing here. So yeah, you can look at Nova. Making a bounce off that support on the weekly. Perfect. It looks like it's trying to make a bottom here. Nova. So yes, solar stocks. So yeah, there's a lot of trash out there that you can get into. We'll see how that goes. And let me pull up the website for you guys. Let's see. For MSOS. So here's all the holdings right there. You see that? Okay, so that's the website. Yeah. So I don't know if you want a penny stock gamble, plenty of charts to look at if you want to do it individually. If you're lazy, just use the ETF MSOS. And if you want to do the leverage, then I would say you can use MSOX. So that's 2x ETF of MSOS. Okay. So it's going to have a split soon, right? There you go. A reverse split of 20. So right now it's below $1. So it's going to have to get back up above $1 for compliance sake. So it's going to have a reverse split soon. Tuesday, November 26th. So watch that. Watch for that. So I don't know. Maybe there's something to it. Look at TAN. Yeah, the whole ETF is down. There's going to be a lot of panic sellers. Oh, another stock to look at. Let me see. was JKS, I think. JKS. So yeah, JKS. JKS. Yeah, I'm watching this one too. This might be a good trade. I mean, Chinese solar, pretty trashy, but you know, it's got nice swings to trade on. So if you catch them at the right time, you know, this one here, up, up, up. And if you short, okay, go ahead for it. You can go down too. Down, down. Yeah, so either way, it's good. It's good. It's good. Okay. It's good. So that's all you need. All right. All there. All there. Perfect. 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 So that's all I need to see. Let's see what else. What else? What else? SMCI, and I think. Oh yeah, nat gas. I was gonna talk about nat gas a bit. Natural gas been looking really good again for me. So we finally got back above $3 million BTUs. Okay. So let me look at the futures here on the futures. See, now we're at the top of this, back to the top. So this was so when I told people to start trading, this was around here, right? August, July, August. So when it made its move from here, $2 to $3, $3 per million BTUs. So then it pulled back. No good. No good. I mean, we're coming up on winter. Okay. So that's not good. That's not good. Okay. Not good at all. So now it's back up here. Seasonally, it's over for natural gas. It could hold here, assuming like Chinese coal builds up, but I cannot get bullish on it again, because I'll tell you why. Now, the spot price looks a lot bullish, right? Comparatively. Now, yeah, so because if you look at Boyle, so if you use the ETF Boyle, see the problem here? So after the split, so this reverse split, so it's like 48 divided by 5, right? So this is about close to $10 right now, right? If you did it, but the pre reverse split price is about $10, and it was bottoming at 8 when we got in. We had to get out there because once it dropped here, it was just like, nah, it's over, it's over. So it went below 8, tried again, tried to do a little bit just to get a little bit here, but that was it. There's not much you can do now. It's way too late. We're getting into December soon. I cannot tell people to be like, yeah, because the way it moves, you see it decays, right? And I'll show you why. Because it should not, it should be at the same price it was over here, right? Why isn't it at 58? Why is it at 48? Well, I'll tell you why. First, it's a leverage ETF. And so that takes away some of the moves. If it's choppy, you'll get that kind of decay, right? You're going up and down some percentage. You're not going up and down by the actual price of the underlying instrument. Second, they have a fee. You got to pay some maintenance fee or whatever fee that gets eaten away each time you do that. And then other thing too is it has to roll over futures. That's the worst part about it. So here, let me show you on TradingView how that looks. You see this? You see these things here? That's a rollover. Every month it rolls over. Okay. Now, there's something here called adjust for contract changes. Now, if I click that, you see, it looks different. This is how it looks for everyone that just does spot prices. So if I just did a spot price, well, there's no spot price on here, but this is close enough to spot. You see, it looks like that. But because this is futures and you have expiration and rollovers, the ETF has to go to the next month out. So how Boyle does it, it has to buy 2 months out futures, rolls it over. So every time it does that, you lose value because the months ahead tend to be more expensive than the current month. price. So when you have to buy future months and trade them in, so you have to sell what you have currently, future contracts that expire, and then buy 2 months out, you get these effects. Then when you compound them over time, you see this? So what should be a flat move, actually, it just goes down. So that's why holding those ETFs that boil, you just can't, you just can't hold it, okay? And the same thing goes for any kind of leverage ETF in general, even though they're not going by futures like SOX L. Like anybody that just held through this is like, look at that. Dude. You're not gonna easily get that back. Like you look at the semiconductors and you didn't sell up here when you got the second chance. You got this big red candle, you didn't sell, and now you were down all the way 65%. If I look at the actual underlying SOX ETF, you see that? You see that? Like, look at this shape here. This is flat, right? This is pretty much a flat shape. But if I look at the leverage ETF, oh man, it's not, man. It's actually curving downward, right? Because every time it goes up, and these ETFs are terrible to hold. They're just meant for trading. Like they're okay to hold if you know there's a big trend. Like let's say this is a good trend. This one. Okay, fine. You can hold it. It's not a straight line, but it's close enough to a straight line that you could hold the ETF through here. But when you're just chopping like this area here, no way would you hold it. No way. So they're good for trading. That's all I can say. Some people like think, as long as there's a bigger trend, like let's say here, like 2016 to 2018 or the 2013, if you can manage to hit a trend like that, okay, fine, go for it. But again, you got to be able to read these charts pretty well, right? So that I don't know if it means anything, to do it that way, but it's fine for trading. So let's say maybe you have long positions in the semiconductor ETF SMH, but you feel like, oh well, I know this is going to go down this month, but I don't want to sell it because of tax reasons. I guess you can get SOX S and short it that way, like because you don't have a margin account to short and you just want to use the ETF. Okay, you don't want to get puts or sell calls. Okay, but that's up to you. It's a stylistic point of view, but for the most part, yeah, don't be holding these things. They're not meant to be held in general. Some people might say like, yeah, it's okay to hold it when you have like something like SPY, right? I think there's I mentioned this before. There was a 5x SPY or some ETF. I forgot what it was called because they changed their name. They used to be XXXX or something, and then they had to change the name. They changed it to something else now. 4X, was it 4X ETF? SPY. Oh yeah, SPY U. Yeah, here we go. Yeah, I mean, when maybe if they made this ETF during the smooth days going up, fine, but right now this is terrible. Way too much chop here. So it's not going to be a perfect 4X, right? Let's see. So let's say December 2023, it started. So now we're about up 100% using this 4X ETF. Okay. All right. So roughly, that's pretty good. So let's see how December 2023. So around here, I guess, right? Yeah, yeah, it's close to 4X, so it's not bad. Not bad. So I guess they did a good job with that ETF. It doesn't eat up too much. Not bad. Okay. Well, I mean, I'm not going to recommend it, but hey, you know what? You do you. If you want to play this one, yeah, SPY you. Go for it. No clue. Anyhow. Okay, is everybody going crazy for after hours yet? Man, by Friday nothing's gonna happen probably. It's like you gotta get me some panics here. Panic here. So NNOX, right? So I mentioned this one a little bit. So I was muted a little bit. NNOX has earnings tomorrow, and it's tied to Nvidia too. So I'm gonna be curious how this goes. If this just shoots up for no reason tomorrow, that's crazy. NNOX. So yeah, put that on your list. Put that on your list for tomorrow to watch. Might be some fun, interesting fireworks. Maybe a day trade. I don't know. Maybe it does something funny. So it should be really volatile. All right. Okay, guys. I'll see ya. I'm gonna go get some food. Get some food. What the heck is all this gambling? You want to bet on what is said during? No. What do I care about that? Oh my God. Just man, just go on Polymarket if you want to do side bets or something. Does Polymarket have something? Maybe what tie someone wears. Like this, how many times somebody farts. Yeah, go to Polymarket. They got tons of that stuff. Okay. Alrighty, guys. I'll see ya. I think there was a lot on the list. Hopefully I covered a lot of them. Oh yeah, I had the companies too. Hey, hold on. Let me see. Hold on. Let me see. So there was the companies that do natural gas. So I mentioned these a little bit, very briefly. EE, Accelerate Energy. So that goes with natural gas. So I'm gonna be watching these. Okay, I'm watching these. EQT. Okay, EQT. Yeah, because like the Latinos for Trump was asking me for, so I looked over my old natural gas list. So these were the ones that looked pretty good to me. I'll have to look over again and see if there's more, but you can see how well these are. These are the best ones, all right? Because LNG was the one he mentioned to me, which is very famous. Cheniere Energy is one of the biggest ones doing liquid natural gas companies. Okay, but I'm gonna bring out some ones that most people might not know. KMI, Kinder Morgan, very good. These things have been going up even before Trump. So that this is what you're looking for. You want ones that were already looking good because they are getting ready for natural gas to go back up, right? And then Trump is just an added benefit. That's it. And China will be an added benefit when they do. See, same thing with the WMB Williams Companies Incorporated. So yes, I will have to look at this while the natural gas stuff. Yeah, you gotta know what to look for. Alrighty, man. I'll see you. I mean, I don't know. SMCI might do fine anyway because after hours means nothing until the next day, because once people come out and start yapping and analysts come in like, oh, upgrade, and then all these things start shooting up again for no reason. It depends. It's all up on you. Yeah, but I did see HB, like SMCI hit 32 on the overnight trading on Robinhood. So an hour before pre-market, SMCI just shot up. Like, I was like, man, that means there's a lot of people probably trying to push it to that level at some point later down the line. So we'll see what happens if Nvidia is the actual catalyst, because that's dependent on what they say on the earnings call when somebody's going to ask about it. Okay, somebody's going to ask during the earnings call, well, what's going on with SMCI? Are you still the number one customer? Oh, blah blah blah. And then it's like, no. Fucking market's crazy, bro. Market's crazy. It's psycho. So I covered that. Did I cover some GameStop with you guys yet? Yeah, I forget. I think I did. Yeah, so I said like, yeah, try to touch, like, got to get out of the 28 area, 29 area, and then we're flying. GameStop is flying. See you there. I'm waiting to add more, so I've been adding on the way up a little bit, but I need more confirmation before the see. But yeah, you can watch NNOX tomorrow, NNOX, maybe some day trading opportunity with this piece of trash company, but it's got that penny stock feel to it. Very good. It's tied to Nvidia. It has earnings tomorrow. How convenient, tomorrow morning. So it might go with the Nvidia flow, depending on how they decide what Nvidia does tomorrow. But I feel like they're just gonna try to murder as many options as possible with Nvidia. It's like gonna go nowhere. They're expecting like plus minus 12%. I'm like, that's not gonna happen. It's gonna be boring. Watch. Boring's fine with me. As long as there's no extra volatility. We don't want that. We don't want that, guys. So stay within the band. Stay within the band, and the QQQ and all that. Yeah, because the worst thing to have is volatility right now while we're at the highs. That it just makes it way too easy to push it down, anything down. And after Nvidia, I don't think there's anything important. Well, there's going to be two. I might as well mention this. There'll be two Chinese company earnings tomorrow. The Temu, okay, so Pinduoduo. So that's the Temu parent company, PDD Holdings, will report tomorrow morning. PDD, you can pay attention to that one, and if you think there's a opportunity to swing it, because it makes nice swings. You can 90 to 160 if you. I didn't play that, but that would have been something to play because, like, look here, right? Look at this. So you can see this was a pretty important support area or something like that. Yeah, so it's somewhere here to here, this 80 to 100 area. Now it's just been waffling here, so I'll be watching that. And Baidu, BIDU. Also, now it's just going back to the bottoms here. See that? So yeah, watch that one too. Quick scalp, maybe it'll come back up to 100 from 86 or something like that. Yeah, so that's something else to watch. Anything else? I think I should talk about some cryptos like Doge, right? Doge. Yeah, I told Juan not to get back into that, and yeah, it's definitely not following Bitcoin very well comparatively. See? 4 hour. Yeah. It's still flat. It has kind of a look like it's not going to follow it much. So if Bitcoin does crap out, then yeah, I wouldn't be holding Doge at this point. Same thing with the other ones, ETC. So Ethereum Classic. Yeah, this one, and I think Litecoin looks worse. Litecoin. Yeah, look at that. No, man, this is not what you want to see on the alco. So it's not alt season. They call it alt season, ALT season. We're not in alt season yet. So these things, no. Let Bitcoin cook, and then we can consider the other ones. Okay, guys. Yeah, that's about it. I think I covered that. Yeah, I'll have to see what the other crypto stocks to cover are, because we had Core Z. I like Core Z. I'll see if I can recommend that again to get into. Wolf Z, because these charts look very nice. Wolf Z's kind of, but it's still above support. Okay. Wolf, so WULF and HUT. I like that one now. It's becoming more of my favorite miner. So one Canadian miner for me from Canada. So HUT. And then BTDR had earnings today. I mean, not today, 2 days ago. Quite weird action. but it dropped to 8 something, 880, close to 9, came back up to 12. Yeah, so okay, I'll put it on my watch list now. BitDeer Technologies, BTDR. Yeah, I'll put that up on the ranking. Whatever. So I'll have to go over that again with you guys. See what's up to buy. So yeah, HB sold his Mara thing. So glad he instinctively knew that. I told you guys that I would recommend selling because it's close to that top of that range and it's time to sell, you know, this area. So it doesn't mean I know what's going to happen, but that's the trade has been completed. That was the trade I was looking for to do that trade. And that's it. There's no ego here. I'm not here to predict anything to exactness, but I'm just going to say like what's most likely going to happen. And I'll take a trade that looks good to me, you know? And I think, does that mean it's going to go up to 100K from here or down? No, I don't know that. I don't know that for sure, but I'll have to see how that goes. So that's it. Very good. Very nice. Okay. Oh yeah, White John Galt still pressuring me to try to buy VIX shares or some junk. Okay, I don't know. Maybe you missed out. I'm not gonna buy puts, man. What the heck do I care about that? I already made my money, bro, today. All right. So anyway, yes, I have to go eat. You know, humans still have to do human things. You guys can watch NVIDIA's after hour movements and see what happens. You can waste your time looking at that. It's just a bunch of people jerking off in after hours, pushing the shares up and down with limited liquidity. So probably meaningless. Good luck, White Jaw Galt. Good luck tomorrow. So I'll see you guys. You'll probably all get theta burned or something. Yeah, later.
Hey, yo! Check it out. Here it comes.
Something ain't right, yo.
Watch out, man. Here come that fool. It's packing. Here he comes.
Yo, son, come on. Yo, Omar's coming, man. Oh, shit!
If you can't pay, you better pray. John Galt's coming.
Hey, Stu, your rent's due, motherfucker. And don't be pulling that $40 damn shit on me, you hear? Hey, you conscious.
Yo, I don't want to make your life no hard. I'm just doing my job. Yo, you live here, I work here. I'm doing my job.